Hello, this is Mijun from Mijuron University. Let's start today's Mijuron news for June 16th. Welcome to Mijun, where we continue to uphold the fundamentals of United States stock investing as always. Mijun family, I hope you all had an enjoyable and relaxing weekend. The Mijun YouTube channel was very busy even over the weekend. We uploaded as many as 3 videos. The first 2 videos are episodes of United States Stock Elementary School, featuring Chief Executive Officer Kim In-jung of Choi Stock, and the third video is me hosting The Man Who Reads Books on Mijun for the first time in a long while. What about United States Stock Elementary School? Personally, I really hope that many people will watch this week's video. Even if you're not a member of ChoiStar, there is a lot of very useful information. So if you haven't watched it yet, I think it would be good to take some time to check it out. It's also been a really long time since I tried doing The Man Who Reads Books. A lot of people gave me positive comments. From now on, if there are good books, I'll try to create more opportunities to read them to you. I'm becoming a bit more productive than before. Recently, by using quite a lot of artificial intelligence-related programs, my efficiency has been maximized. So when my family moves to Malaysia soon, I plan to gradually increase my productivity and expand various types of content. Of course, it's thanks to artificial intelligence. But as I keep using artificial intelligence, I realize something. The price is not cheap. As I mentioned before, I currently use about 10 different artificial intelligence programs, and many of them cost several $100,000 per year. So as I keep spending money like this, I started to think that the gap between people who can use artificial intelligence and those who can't might get bigger in the future. I'm not sure if you like the author Yuval Harari. Personally, he's one of the people I really respect. He published a book in 2017 called Homo, Deus. The content is a bit disturbing. He argues that as humanity continues to develop, a new kind of human will emerge who benefits from artificial intelligence and robotics. As you can see, Zeus and Homo are combined, so it refers to humans becoming deified. In the end, we can understand this as the prediction that humanity will move from Homo sapiens to Homo Deus. But there's one problem here. What Yuval Harari is concerned about is this. Looking at human history, we are now Homo sapiens, and according to the past, the Homo sapiens species has always evolved by driving other species to extinction. That's why, if the gap between the rich and the poor becomes extreme in the future, and if Homo Deus, who can benefit from artificial intelligence and robotics, appears, then eventually Homo Deus might be able to wipe out Homo sapiens. Or at least they could build a completely separate world. It means there would be a total separation. This is the book that talks about such a terrifying future. If I get the chance later, even though it's not a book about stocks, I might try to find an opportunity to read it to you. Anyway, the reason I'm telling you this is because recently I've been using artificial intelligence very often, and while there are a lot of convenient aspects, there are also many things that worry me. If things continue like this, the polarization between people who benefit from artificial intelligence and robotics and those who don't will only get worse. We need to think about how we should address this kind of social phenomenon. Fortunately, we humans, Homo sapiens, have one big advantage that other animals don't have, and that's the ability to cooperate and work together. By creating synergy in this way and overcoming great obstacles, humanity has continued to evolve up to now. In my opinion, I think the community called Mijihun is also a typical example of this. I've mentioned this to you several times, but if I add up all the memberships I'm currently subscribed to, I think there are almost 30. I have subscribed to around 7 or 8 media memberships. And I'm also subscribed to about 5 or 6 tools for stock analysis, and I use a lot of different tools like software subscriptions that use artificial intelligence and so on. But making such significant investments costs me several million won a year. If I were just an ordinary individual investor investing alone without being part of a community like Mijun, I wonder if I could really maximize my returns while making these kinds of investments. That's what I start to think about. So many of you compliment me, saying that my broadcasts are insightful and contain really good content. In the end, it's all possible because of your support. Because you all watch the Mise-On channel, and because more than 3,000 of you have joined the Mise-On membership, I'm able to make various investments to provide investment insights. By using these various tools, I believe it lays the foundation for developing content that can be differentiated from others and sharing it with all of you. I will continue to do my best to keep the Mise-On community, which is protecting our stock investment returns, healthy and strong in the future as well. Let's begin with today's major stock news for June 16th. I will now summarize the current United States stock market situation. First, if you look at the S&P 500 map, the map you're seeing now shows the performance from last Friday. Most of the stocks are in red. As we all know, with news of war coming from the Middle East, many investors are worried. That's how we can interpret this. Nevertheless, among the tech stocks, 3 of them really stand out. In the case of Tesla, the stock price surged by nearly 2% after news came out that Elon Musk was reconciling with President Trump. Oracle went up a lot, and its earnings results were very good. In a way, Oracle's earnings results are very positive news for artificial intelligence, so you can see it that way. And Palantir also went up by 1.64%, and the reason is, as we all know, because it benefits from the war. Naturally, when geopolitical tensions increase, the corporate value of Palantir, which contributes to defense, goes up. That's how you can see it. Now, since it's Monday's broadcast, let's take a look at the week's performance. At a glance, it's clearly a mixed trend, but the red is a bit more dominant. So overall, you can see that the number of stocks that fell slightly exceeds the number of stocks that rose. And if you look at the tech stocks, it seems like about half went up and about half went down. Technology and semiconductors performed very well. You can see it that way, but on the other hand, software dropped a lot. So depending on the sector, the results were mixed. Let's take a look at the movements of the major indices over the past week. First, the S&P 500 closed down 0.36%. The Nasdaq 100 was down 0.56%, and the Dow Jones dropped 1.3%. Overall, you can see that most of the indices showed negative numbers. However, despite that, Majun's top pick performed very well. Most of the stocks closed in the green, and the stock that performed the best throughout the week was Tesla. It surged more than 10% over the week. Second, Palantir was up 7.58%, Talon Energy up 7.20%, Celestica up 3.81%, Nextracker up 3.04%, Taiwan Semiconductor Manufacturing Company up 2.89%, and Strategy up 2.24%. B2 was up 1.20%, Credo up 0.73%, Broadcom up 0.72%, Alphabet up 0.57%, Nvidia up 0.18%, and Vistrado up 0.07%, showing slight increases. 6 stocks declined. First, AMD dropped 0.03%, moving sideways, and Bitcoin also showed a slight decrease of 0.19%. Amazon was down 0.69%, Uber dropped 1.95%, Meta was down 2.20%, and Trade Desk fell 4.90%, performing the worst. Now, let's take a look at the market sentiment indicators. Let's start by looking at the market breadth. As for market breadth, 70.4% of stocks still have positive short-term momentum, and 47.4% of stocks are also in a good long-term trend. That's how we can check it. Next is the VIX index. Due to the war, the VIX index went up a lot, but now it has dropped back down below 19.93 under 20. As I mentioned last Friday, the news about the war, it's a short-term negative, but it can't ruin the long-term trend. Remember this. Next is the fear and greed index, which is similar. It briefly dropped to 59, but before we knew it, it went back over 60. The market is still in a stage overflowing with greed, and ChoiceStar's market score also remains in the greed stage. 86, that's a very high level, so personally I think it's necessary to have some cash on hand right now. As Mijun All-in-One members already know, I have already secured the cash ratio I want. I'm currently holding exactly 20%. I think it would be good for you all to also make sure you secure your own cash ratio. Now, if you look at the movement of the futures index, they've all turned positive. As I mentioned, the impact of the war can't last for a very long time. Also, recently, the level of investors has risen a lot. So it's not just me looking at past statistics. Many people already know about them. So investors already know all about this when a war breaks out and are ready to buy up stocks. That's how you can interpret it. In the end, the biggest force that moves the market is fundamentals. This week, several important indicators will be released. First, on Tuesday at 8:30 in the morning, the United States May retail sales data will be announced. That's the famous sales report. Right now, concerns are widespread that the United States economy is slowing down. We'll be able to see on Tuesday whether consumers have really closed their wallets. Now, Wednesday is really important because that's finally the day the Federal Open Market Committee announces the base interest rate. This time, the possibility of a rate change is very low. However, I personally think it's a very important investment point to see whether Jerome Powell, the Fed chair, gives any hints about a rate cut or what kind of stance he takes. Please note that the United States stock market will be closed on Thursday. So everyone, I want to let you know in advance that I also plan to take a day off from my YouTube broadcast, and I ask for your understanding. Everyone, if you come to the main page of the Mijun YouTube channel, you can set a representative video for each channel like this. In my case, I posted a video here that I made 4 years ago, titled, "A Video You Must Watch Before Investing in United States Stocks." The title is, "The Reason Why We Should Invest in Fourth Industrial Revolution Growth Stocks." In my opinion, there is only one reason why we should invest in Fourth Industrial Revolution growth stocks. It's because the Fourth Industrial Revolution has only just begun. Everyone, I have written a book called The Basics of Investing in United States Stocks. There's a very eye-catching chapter in this book called 3 Indicators to Find the Best Growth Stocks. In this chapter, what I claim is this. When seeking growth stocks, remember these 3 crucial factors. That's my key message to you. Now take a look here. The most reliable way I found to select stocks is by checking 3 indicators. The first is market penetration, the second is market share, and the third is growth rate. So if you invest in growth stocks that meet these 3 conditions, you can achieve really great returns. This is the investment strategy I use. Now, among these, market penetration might be a somewhat unfamiliar term. Market penetration refers to how widely a certain technology is being used. For example, let's say we go back to 2010 when Apple had just started launching the iPhone series. You might think, how great would it have been if you had invested in Apple's stock back then? At that time, the key investment indicator was market penetration. Because back then, only about 20% of the United States population was using smartphones. That means the market was huge, but 80% hadn't been penetrated yet. You could define it that way. The second crucial point is to invest in the market leader to gain market share. That's the key takeaway. The third thing is that we need to watch whether this company continues to grow by looking at its sales growth rate and earnings growth rate. It's not just Apple. For example, with Amazon, if you had entered when the penetration rate of the new e-commerce market was low, you could have made tremendous profits. It's the same with Meta. When social networking services first started and market penetration was low, investing in these companies offered endless growth potential. Google and Netflix were similar. Investing in Google when the search market was new and not widely used could have been incredibly lucrative, just like with Netflix in its early days. If you had invested when streaming services first appeared, it would have been one of the stocks that brought tremendous returns. So at this point, we need to think about which markets currently have a low penetration rate. I've often said on broadcasts that artificial intelligence is just the beginning, and that's because I believe the market penetration rate is still low. The same applies to robotics and autonomous driving, not just artificial intelligence currently. Artificial intelligence and autonomous driving have low market penetration rates. NVIDIA leads in artificial intelligence, and no one is really using autonomous driving yet. But we believe there's enormous potential here, and we expect that the leading company could be Tesla. When it comes to smart environments, market penetration is still nearly zero. So, when the market penetration is this low, I believe it's worth investing in Meta, which is currently leading in this area. So today, I'd like to focus on one particular field where the market penetration is still very low. This area is blockchain. When we think of blockchain, Bitcoin comes to mind as a representative example, but in my opinion, the market penetration is still very low. This is especially true for companies and investment institutions. Now, through today's article, I've prepared an opportunity for us to study in detail about stablecoins, which are the second of the endless possibilities of blockchain. Now, if you look at the title of this article, it's content that I'm highly recommending. It is said that more than half of the Fortune 500 companies are building blockchain projects. Now, let's take a look and see for ourselves what kind of projects these companies are considering. Now, more than half of the Fortune 500 companies are building blockchain projects. Although the use of stablecoins is surging, Coinbase pointed out that clear national level regulations in the United States are needed for the next leap in cryptocurrency. Please continue reading. According to the Cryptocurrency Status Survey for the second quarter of 2025 released by the cryptocurrency exchange Coinbase, 6 out of 10 executives from Fortune 500 companies responded that their companies are actively pursuing blockchain-related businesses. Fortune 500 companies are large corporations, right? Among these companies, 6 out of 10 executives said that they are currently planning blockchain-related businesses. That's not all. Small and medium-sized businesses also showed a positive attitude. Currently, 1/3 of them are using cryptocurrency, which is double the figure compared to last year. Moreover, more than 80% of small and medium-sized businesses that are aware of cryptocurrency, they want to use stablecoins like Tether. And what about the percentage of Fortune 500 companies considering stablecoins? It has increased more than 3 times compared to the 2024 survey results. Therefore, interest and enthusiasm for stablecoins are surging. We can clearly see this. In the report, Coinbase states that 2025 is expected to be a year of explosive growth for stablecoins. Thanks to President Trump's pro-cryptocurrency stance, what about the United States Congress? They are pushing for cryptocurrency legislation to establish a clear regulatory framework for the sector. Companies like Circle, a stablecoin issuer, are going for IPOs that stand out in the market. And also, the largest retailers in the United States, including Walmart and Amazon, they are exploring ways to use stablecoins and are reportedly considering the possibility of issuing their own tokens. I'll share a detailed article about this in a moment. According to an April survey of 100 Fortune 500 executives and 251 decision makers from small and medium-sized businesses, the supply of stablecoins has surged by as much as 54% over the past year. Also, this survey was conducted by a third-party research organization. The reason this is being mentioned is because Coinbase generally has a positive stance on stablecoins, so they're clarifying that a third party conducted the research without any influence. That's what Coinbase is saying, right? Last year, the annual stablecoin transfer volume reached $27.6 trillion, which is on par with the giants of payment networks. There are 2 major companies. The amount is huge, surpassing the total transaction volume of Visa and MasterCard by 7.68%. It emphasizes that this demonstrates the realized potential for companies as a faster, cheaper, and more scalable solution for cross-border payments. What this means is, up until now, companies have often used things like Visa and MasterCard, but they no longer have to use these high-fee methods. Finally, they're starting to use stablecoins for transfers because it's really fast. The transfers happen instantly, and it's cheap. The fees are very low, almost non-existent. And because it's a scalable solution, you can expect that more and more companies will steadily use stablecoins for transactions in the future. 90% of Fortune 500 company leaders. They said that comprehensive cryptocurrency regulation in the United States is necessary for cryptocurrencies to reach their full potential. So, while the potential is limitless, the regulations are still not very clear yet. Still, consumers, institutions, and small businesses are involved. They've started to realize that stablecoins are becoming a key tool for solving the biggest financial challenges, like fees and transaction processing. Finally, you can see that more and more companies and consumers are recognizing the value of stablecoins. What about ARK Investment, which is managed by Cathie Wood? They announced that the supply of stablecoins has surged by more than 20% compared to the beginning of the year. If that occurs, it will hit 247 billion. They pointed out that this figure exceeds 1% of the United States M2 money supply. Now you can see that more than 1% of the total M2 money supply is circulating as stablecoins, moving back and forth. Now I'd like to sum it up in one sentence from me, John. Personally, I have a plan. Now, it's already past the middle of June. So, I'm finally wrapping up the first half of the year and gathering some recommended stocks that we should pay attention to in the second half. One of the candidates is Coinbase, and today I'd like to organize and share the reasons why. Now, the more companies use stablecoins, the more likely Coinbase's revenue and profits will increase significantly. This is why I'm looking forward to Coinbase. Let me briefly explain how Coinbase is related to stablecoins. Coinbase mainly earns profits through a stablecoin called United States Dollar Coin. United States Dollar Coin is a digital currency that Coinbase created together with a company called Circle. It's designed to maintain the same value as $1, pegged to the dollar. Let me briefly explain Coinbase's revenue structure. When issuing United States Dollar Coin, you have to actually deposit real dollars in a bank. For example, if you issue 1 million United States dollar coin, you need to deposit $1 million in the bank. And the money deposited in the bank will generate interest income, right? But currently, Coinbase and Circle share this income. That's how it works. Now, especially on the Coinbase platform, customers hold United States dollar coin, right? The interest generated from this is taken 100% by Coinbase. You can look at these sources of income. Now, as mentioned above, United States dollar coin held elsewhere is also split 50-50 between Circle and Coinbase. So, in 2024, Coinbase earned about $2.3 billion in this way. There still aren't many people actually using stablecoins, but even so, they've already generated $2.3 billion. Now, let's take a look at how much potential stablecoins really have. The stablecoin market is growing really fast. In 2024, alone transactions made with stablecoins reached nearly $30 trillion. That's 3 times more than the previous year. That exceeds the total yearly transaction volume of Visa and MasterCard combined, as stated in the article. And what's even more surprising is that even though the scale has increased more than threefold, the growth doesn't stop there. In the first 5 months of 2025, transactions totaling $20.2 trillion took place, a 47% increase from the same period last year. Now, we have to ask why so many companies are starting to use stablecoins. Well, here's the key point. It's because it's so fast and cheap. For example, if a Korean company wants to send money to an American company, it usually takes a few days and the fees are quite high. But if you use United States dollar coin, the transfer is completed in just a few minutes and the fees are much cheaper. So these days there are a lot of global companies, right? Many companies do business with other companies overseas. And for these companies, they can save a huge amount on fees by making payments this way, and they can also send money quickly. So even large banks like Deutsche Bank in Germany have started using stablecoins for international remittances for their corporate clients. Even traditional financial institutions are now using stablecoins. We can see this trend emerging. Now let's summarize the reasons why Coinbase is a company worth paying attention to. As companies use stablecoins more, Coinbase can generate revenue in various ways. First, more United States dollar coin will be included on the Coinbase platform. Large companies like those in the Fortune 500 don't want to manage tens or hundreds of billions of dollars in digital assets themselves. It's just too risky. That's why they look for a trusted institution that can safely store their assets without the risk of hacking or loss. And Coinbase is one of the most trusted institutional custody providers in the United States. It also has the most tradition and is large in scale. Now, as companies' stablecoin holdings increase, the demand for Coinbase's custody services and the scale of assets under custody will also grow. If that happens, Coinbase's interest income could increase. Currently, Coinbase offers customers an annual interest rate of 4.1% for holding United States dollar coin. That's quite high. However, in reality, they receive even higher interest and take the difference as profit. Now, the second point is that trading volume increases. If many companies start using stablecoins for things like employee salaries, supplier payments, or customer refunds, the number of transactions will increase, and the more transactions there are, the more fees are collected for each transaction. Third, there is a high possibility of acquiring many new corporate clients. Because up until now, most of the companies using Coinbase were those interested in or already investing in cryptocurrency. But from now on, companies interested in stable coins with stability can also be secured as corporate clients. You can see it that way. And there's an important point. Corporate clients typically generate higher profits and transaction volumes compared to individual customers. And they're also more likely to use various additional services. Therefore, there's a higher chance of acquiring a variety of new customers. I think that's how we can sum it up. Coinbase's revenue from stablecoins has already become an important source of income, accounting for about 15% of their total revenue. They generated around $210 million in Q4 2024. And also the company's chief executive officer, Coinbase's chief executive officer, he publicly announced his goal to make United States dollar coin the world's #1 dollar stablecoin. From an investor's viewpoint, this company is worth monitoring at least once, in my opinion. Of course, there are some risks involved. Especially now, there's Tether United States dollar, which is one of the most popular stablecoins, and there's also PayPal United States dollar. Now, the fact that these competing stablecoins can take market share could be the biggest concern. And another thing, if governments around the world issue central bank digital currencies, the need for stablecoins could decrease. And another thing is regulation. So we need to remember that there is no such thing as a risk-free investment. Now, let me briefly show you Coinbase's momentum. Out of 26 indicators, 7 indicate sell 10 are neutral and 9 indicate buy. All right, let's scroll down and take a quick look at the one-year stock chart. Coinbase is currently at a very important technical turning point. If you look here, a cup has formed and the handle is being created. If it breaks through the $275 resistance line, the handle will be completed. This area is crucial. If it breaks through $275 and rallies, the cup and handle pattern will be completed. So, let me explain with 2 different scenarios. Since this is a consolidation phase, the most crucial factor is whether it breaks out upwards or falls back down. The 21-day moving average, shown as the orange line at dollars, 255 is currently above the price, acting as resistance. If the price surpasses this level, the 21-day moving average could become a support line. It means it becomes a support line. After the stock consolidates, it must break above the 21-day moving average at $255 and ultimately above $275. If it breaks the $275 resistance with increased volume, that means now that the cup and handle pattern is completely formed, it can then challenge the all-time high, which can be considered the target price. That's how you can analyze it. But there is also a downside scenario. What that means is, if it can't break through the 20-day moving average, or even if it does break through the 20-day moving average but can't surpass $275, then the famous cup and handle pattern won't be completed. If that happens, it could potentially move into a downward trend. The green line represents the 60-day moving average. If a downward trend is detected, there's a good chance it could rebound from this point. That's the way to interpret it. Today's broadcast is a special on stablecoins. That's because on June 13th, which was a Friday, there was some amazing news that Amazon and Walmart are considering issuing their own stablecoins. Now, this article has a very important meaning. And in response to Mijun's comment, I wrote down some details. Instead of reading it myself, I'll have an artificial intelligence that sounds like me read this article for you. Now, this is a bit of a new attempt. It would be great if you could give me some feedback on how uncomfortable you felt while watching. All right, that's it for today's broadcast. For the first time in a while, I gathered and shared various articles with you about fields other than artificial intelligence. Tomorrow, I'll be back to greet you again with stocks that have low market penetration, so I can help you with your investment activities. Let's all keep fighting together until the day we can all retire through investing in United States stocks. Have a happy day. Thank you. The Wall Street Journal, citing anonymous sources, reported that multinational companies such as Amazon and Walmart have recently discussed issuing their own stablecoins in the United States. A Walmart spokesperson declined to comment, and Amazon representatives did not immediately respond to requests for comment. Expedia Group and several airlines. Stablecoins are generally cryptocurrency tokens whose value is pegged to a fiat currency like the dollar, making them more suitable as a means of payment than other, more volatile coins. President Trump's return to office and ongoing related legislation in the United States Congress have reignited enthusiasm for stablecoins. Supporters argue that stablecoins can dramatically reduce payment costs and increase remittance speeds. The issuance of Tether USTT, by far the largest stablecoin among its peers, has surged to $155 billion. Following this news, the stock prices of Visa and MasterCard declined, with Visa dropping as much as 7.1% and MasterCard falling up to 6.2%. This is the largest drop in stock prices for both companies since last April. Moves by Amazon, Walmart, and other global retailers to build their own blockchain-based payment systems could hurt the profits of credit card issuers. Banks around the world, concerned that their highly profitable payment and remittance businesses could be at risk, are also pushing to issue stablecoins. According to Bloomberg News, Deutsche Bank and Santander Bank are among the financial institutions reportedly considering issuing such tokens. Mijun's comment: the reason Amazon and Walmart are considering issuing their own stablecoins is mainly to reduce the huge burden of payment processing fees. For large retailers like Amazon and Walmart, the biggest reason for considering issuing their own stablecoins is to solve the problem of massive payment fees. Currently, these companies have to pay about 2 to 3% of their sales as fees to card companies like Visa and MasterCard every time customers pay with credit or debit cards. The reality of the fee burden. Looking at the specific numbers, Amazon's annual sales are about $500 billion, and Walmart's are about $650 billion. The amount they pay just in card transaction fees is $15 billion and $20 billion, respectively. Converted to Korean won, that's an enormous cost of 20 to 30 trillion won per year being paid to intermediary payment companies. If stablecoins are introduced, these intermediaries can be bypassed completely. If customers pay directly with a stablecoin pegged to the dollar, they can complete transactions safely and instantly without going through the traditional card payment system, reducing fees to less than 0.1%. Blockchain-based stablecoin payments have network fees that are almost zero, or just a fixed few cents. Efficiency of global business. It usually takes about 1 to 3 business days for card payment funds to be fully deposited into a retailer's account, whereas stablecoin transfers are confirmed within seconds to minutes. Amazon and Walmart conduct major daily transactions with international manufacturers and logistics partners. Therefore, if instant payments become possible, it can reduce working capital and make the supply chain more agile. Also, since these companies operate globally, they want to solve the problems of exchange rate fees and processing delays that occur in international payments. By using stablecoins, whether the customer is in the United States, Europe, or Asia, they can make instant payments with the same digital currency, eliminating all the complicated currency exchange processes and the additional costs that come with them. Customer lock-in effect and data collection. If a company issues its own stablecoin, customers will hold that coin, and it naturally becomes a currency that can only be used within that company, increasing customer loyalty. It works like department store gift certificates or the Starbucks card, keeping customers tied to the company's own ecosystem. Furthermore, the company can collect all payment data on its own, allowing it to more accurately understand customers' purchasing patterns, preferences, and consumption habits. Currently, credit card companies take some of this data in the middle, but with stablecoins, companies can secure 100% of the data themselves. Expansion into the financial ecosystem. In the long term, companies can aim to expand beyond simple payment methods and become financial service providers. If they can provide lending, investment, and saving services based on their own stablecoin, retailers can expand their business scope to become comprehensive financial platforms. Amazon has already launched financial services like Amazon Pay and Amazon Lending, and stablecoins can become a key infrastructure to further strengthen these services. First mover advantage. Central bank digital currencies, CBDCs, and digital payments are spreading worldwide. If they build their own payment system and digital currency in advance, they won't just be dragged along by changes in the future financial environment, they can actually secure a leading position in the market. In the end, Amazon and Walmart's consideration of stablecoins is not just about adopting new technology, it's a direct challenge to the traditional financial system and a strategic move to secure leadership in the future commerce ecosystem. In conclusion, Amazon and Walmart are aiming to catch four birds with one stone by issuing their own stablecoins, reducing costs, attracting customers, securing data sovereignty, and strengthening future competitiveness, all by taking direct control of payments instead of relying on external providers. Thank you.